If you're self-employed, a freelancer, contractor, online business owner, or even someone with a profitable side hustle, there's one IRS rule that almost everyone gets wrong: quarterly taxes. The IRS expects you to pay taxes as you earn money, not just once a year. Miss those quarterly payments and you can get hit with penalties, even if you pay everything when you file your tax return. Today, I'm going to break down everything you need to know: when the IRS requires quarterly taxes, how to calculate what you owe, every method you can use to pay, and what the penalties really are if you don't. I'm Josh Katz, CPA. Let's get started. First of all, what are quarterly taxes? When you work a normal W-2 job, your employer automatically withholds taxes from every paycheck. But if you're self-employed, nobody's withholding for you. So instead, the IRS requires you to make estimated tax payments 4 times a year. These payments cover 2 major taxes: federal income tax and self-employment tax, which is your Social Security and Medicare tax, which is about 15.3%. Quarterly taxes are basically your way of prepaying what you owe. The IRS requires quarterly payments. Here's the rule in plain English. If your tax bill will be $1,000 or more, you must pay throughout the year. You are likely required to pay quarterly taxes if you receive 1099 income, if you run your own business or LLC, you freelance or consult, you earn side hustle income with profit, you have rental income or investment income with no withholdings. Here's another way to tell. If you're consistently profitable, even a few $1,000s a year, you almost certainly meet the requirement. How much do you need to pay? You need to know the safe harbor rule. The good news is that you don't have to guess. The IRS gives you a formula called the safe harbor rule. And if you follow it, you can avoid penalties, even if your income changes. The rule is that you must pay the lesser of 90% of the tax you owe this year, 100% of last year's total tax, or 110% if your adjusted gross income was over $150,000. Most people use the last year's tax liability because it's simple and penalty proof. How can you estimate payments? If you want a fast estimate without doing a lot of math, set aside 25 to 35% of your profit. Why? Income tax typically runs 10 to 22% for most small business owners. Self-employment tax is 15.3%. That puts most people right in that 25 to 35% range. Here's an example. You make $5,000 a month in profit. Set aside $1,250 to $1,500 for taxes. This won't be perfect, but it keeps you extremely close to what you'll owe. What are the penalties for not paying quarterlies? A lot of people don't realize this, but even if you file your return on time and pay everything you owe, you can still get hit with penalties for underpaying during the year. The penalty generally changes every quarter, and the higher the interest rates are, the higher the penalty. And remember, the IRS changes this penalty automatically if you underpay during the year. It doesn't matter that you paid your taxes in full at tax time. How to pay your quarterly taxes? There are several ways to pay, and they're all easy. Use your IRS online account. If you create an IRS online account, you can view your past payments, see your balance, schedule future payments ahead of time, and track how much you've paid during the year. This is a great way to stay organized. Another way is to ask your accountant to set up automatic payments. Your accountant can calculate your quarterly amounts and schedule reoccurring payments. It can also help you file with vouchers and make sure you follow the safe harbor rule. This is usually the easiest way to avoid penalties if you're working with an accountant. Can you mail a check? Yes. Using Form 1040-ES, if you prefer the old school method, you can print the 1040-ES payment voucher, write a check, and mail it to the IRS. Just make sure you mail it to the correct IRS address. It depends on your state. You can also pay the IRS direct through your bank. This is the fastest method for many people. There is no account needed. You can pay instantly, and you would choose estimated taxes as a reason for payment. The quarterly deadlines are April 15th, June 15th, September 15th, and January 15th of the following year. Even though they're called quarterly, the months aren't evenly spaced, and that's normal. To recap, you must pay quarterly taxes if you expect to owe $1,000 or more for the year. You can use the safe harbor or set aside 25 to 35% of your profit. You can pay online, automatically through an accountant, or by mail. Avoid penalties by paying throughout the year, not just in April. If you found this helpful, hit like, subscribe, and check out my other videos for small business tax strategy. I'm Josh Katz, CPA, and thanks for watching.